Hi, this is Stock Investor Davis. Let's take a look at ENPH reviewing its 2023 third quarter results, followed by looking ahead at its fourth quarter guidance, and closing with a technical analysis of the stock price. There are chapters below if you want to skip ahead to a certain section. Please like and subscribe. Starting with major events occurring this past quarter, which will likely help us understand the quarter's results. We see the company announcing the entry into a multitude of new countries, including Greece, South Africa, Sweden, and Denmark. Also announcing launches of new products such as its IQ EV charger in the US and Canada, its IQ8 in India, and IQ Combiner 3P in 9 European countries. Clearly, the company is focusing on expansion. We'll see how this strategy is impacting its results. Looking at its income statement, in a broad summary, we see its third quarter showing a relatively flat or declining result when comparing to its same period in 2022. But when observing its 9-month ending period, we see solid growth for the company when compared to the same period in 2022. The best examples of this finding is the company's revenue and net income. We see when comparing the third quarter 2022 to 2023 revenue, there is a decline from $634 million to $551 million, and net income relatively flat from $115 million to $114 million. Alternatively, when we compare the 9-month period, 2022 and 2023, revenue and net income, there's an increase in both of these categories. Revenue increasing from $1.6 billion to nearly $2 billion, and net income of $243 million up to $418 million. Let's take another look at this information in a different way. Here we have essentially the past 3 years of data broken out by quarter. I'm going to hone in on the two charts at the top showing its quarterly revenue and gross margin percentage. First, focusing on the chart in the top left, we see a strong decline in its revenue, as mentioned in our last slide. The dark blue bars indicating 2023 revenue going from peak results above $700 million in quarter 1 and 2 to now $551 million in this third quarter. Prior to looking at management's guidance, one might forecast a strong rebound in this upcoming quarter, as it has historically been its best quarter. We'll soon see this is not the case. Shifting to the chart on the top right, we see a silver lining for the company in its gross margin percentage continually improving to nearly 50% in this most recent quarter. Before we look at the other financial statements, let's examine why this revenue decline is occurring. Here we have management's interpretation of the sharp decline in revenue. Management stating that the decline in the US is due primarily as a result of its higher interest rates and the transition from NEM 2 to now NEM 3 in California. This is a decrease in customer payback rate from 100% of each kilowatt hour exported to 75%. Also in Europe, management notes a decline in revenue primarily due to a slowdown in purchases after the initial surge in sales related to the Russia and Ukraine conflict and the recent lower utility rates. We now switch to its balance sheet, where we see its current ratio is over 3, with the company having nearly $1.5 billion in marketable securities. This is nearly twice as much of all of its current liabilities. The company makes no mention of any plans as to its excess assets. Including these accounts, we have highlighted the bigger changes of greater than $100 million. Its cash balance is actually down $180 million. Marketable securities is up $250 million. Accounts receivable is up $120 million. Accrued liabilities up $140 million. and accumulated earnings up $108 million. None of these changes weren't a concern for me. Transitioning to its cash flow statement, we have again highlighted the larger movements for the 9 months ended. Most notable increases to its cash include its net income, up $175 million, and maturities of its marketable securities up over $1 billion. Most notable decreases to its cash include accounts receivable down $100 million, purchases of marketable securities down $1.17 billion, and repurchases of its common stock down $310 million. It is definitely nice to see the company using some of its excess cash to repurchase its own stock, potentially raising its stock price. Prior to looking at the company's guidance for the quarter ahead, I want to share this one insight that draws some concern for me today. I highlighted that ENPH sells EV chargers compatible with CCS and CHAdeMO, but not the NACS. To me, the company will gain more favor if it can create an adapter for that charging type. We don't currently have a breakout of that revenue type, so it may not matter much at this point, considering its primary market is solar. But I imagine adding that compatibility to the NACS charging type could be a favorable revenue generator for this product line. Now looking at company's guidance, we see a further decline in revenue to between $300 and $350 million. As a reminder, revenue already declined from $711 million to $551 million quarter over quarter, and now it projects a best case of $350 million. Again, I like its gross margin improvement near 50%, but even with that, when we factor in its projected operating expenses for the quarter, this company will barely break even. We're still new to this company, so it may be going through some sort of cyclical cycle, but this is not good in my opinion. Let's see now what the analysts are showing. We see that prior to ENPH releasing its third quarter results, its earnings per share and revenue missed slightly. Then, looking ahead, it looks like they need to revise their figures way down, because referring to management's guidance of between 300 and 350 million, that is nearly half of what we see analysts showing at $601 million. This difference can be expected to drive down its full year projections. Similarly, analysts forecast $1.13 in earnings per share for fourth quarter, but based on management's figures, the company is going to barely break even, resulting in earnings per share near $0.00. We do now have the updated projections as of today. Here we see, as we expected, the revenue has been reset to the high end of management's expectations at around $347 million, and the decrease has been carried to its full year estimate. However, its earnings hasn't pulled back as far as I would expect, currently listed at 59 cents EPS, which as I see it will likely be below that, closer to zero. However, this likely is a diluted earnings per share, which has other factors. Regardless, we'll see how everything turns out in about 3 months. Wrapping up with its technical analysis, ENPH $91. This company has been in a downtrend since September 2022. Multiple times it appeared to find support and then continued lower, most recently breaking through a support point of $116. The next noted support point is $60. The price is okay. Thank you for watching. Please like and subscribe.